Hard red winter wheat futures put in a hard day's work to post a solid rally, and the other grain markets barely noticed. Corn was modestly higher. Bean prices were knocking on the door of double-digit losses. The buyers left the livestock market. Most contracts there were sharply lower.
Live from a hard day's day via Farm Journal broadcast, this is AgriTalk. This afternoon, we begin with a conversation with Andy Shissler from S&W Trading, directly following the news. Todd Bubba Horwitz from BubbaTrading.com. Me? I'm handsome newsman Davis Michelson. Now, welcome the host of AgriTalk, Chip Lowry.
All right, Davis. Hey, thanks, buddy. Appreciate that. Beautiful day in Northeast Iowa, man. Beautiful.
Yeah, samesies. Same here. 69 degrees, medium sun, I'd call it.
Yeah. We might be. It's like we're looking at the same thing out there.
Mm-hmm. Skies are partly medium.
Yeah, okay, I'll go along with that. Welcome to AgriTalk. We've got Bubba coming up here in just a bit. We had inflation data out this morning.
Oh, boy.
And I want to get his take on what he thinks because finally, Davis, there are conversations happening on the business networks about, maybe this inflation thing isn't quite dead yet. It has taken a while for that conversation to come around to the general business media, but here it is. Bubba's been on it forever.
He has.
Bubba never left it.
And I believe the world would be a better place if more people would just take some time and listen to AgriTalk. We could have avoided all of this.
Yeah. Could have avoided all the confusion.
Yes.
A lot of it anyway.
Lots of it. Most of it.
Do you know how much more fun it is to live in a life of clarity?
Couldn't tell you, buddy. I've never been there. But you have fun with that, bro.
Love it. And then get your deep thinking hat on for a conversation with Andy Shissler from S&W Trading. We're going to talk about some U.S.-China relations.
Okay.
We are going to talk about how things are set up in potentially in favor of China going forward. So we've got a lot to talk about on today's show. It's going to be interesting.
Yep.
All right, let's get to the news.
Chip wheat futures ended the day higher but settled below session highs. Hard red winter wheat futures did the best job of holding on to gains. The May contract opened near session lows and closed just under session highs. Today's close in front month HRW was the highest since March 12. The forecast is calling for a hotter and drier trend in the U.S. and the HRW wheat belt, and that limited selling in futures. Reports of increasing conflicts inside Russia's grain trade also supported U.S. wheat prices. July HRW wheat futures 13.5 cents higher at 5.87 3/4. July SOW up a penny and a half to 5.73 1/2. July spring wheat closed at 6.59. That's up 1 1/4 cent today.
Yeah, big move in the HRW market. Can you believe it? Here we are, April 10th, and maybe that was the first weather move of the year for the wheat market. I don't know. We'll keep track of it.
May corn futures opened on session lows and saw a high-range close while posting an inside trading day. The sideways pattern in corn is expected to continue at least until global production estimates are updated in tomorrow's supply and demand report. Ethanol production in the weekend at April 5 averaged 1.056 million barrels per day, down 17,000 from the previous week, but up 10.1% from a year ago. Ethanol stocks trimmed 208,000 in the week, but remain at a hefty 26.208 million barrels. Weather forecasters still see low risk for stress on Brazil's safrinha corn crop. May corn futures 3 cents higher, 4.34 1/4. July corn up 3 1/4 cents to 4.45 3/4. December corn futures closed at 4.70 1/4, up 2 cents today.
Yeah, and exactly what China is doing with imports of Ukrainian corn, that's something that I want to talk about with Andy coming up here in just a bit.
USDA this morning announced the sale of 254,000 metric tons of U.S. soybeans for delivery to unknown destinations in the 24-25 marketing year. The new crop bean sale failed to provide support for bean prices. May soybean oil futures fell to the lowest level since March 12. Then turned to slightly higher levels for the close on spillover support from another rally in crude oil. Spreaders stayed on the sell side of the meal market, putting extra pressure on soybeans. May beans closed at the lowest level since March 6, with the low-range settlement posting to a test of support at 11.50. May soybeans 9 3/4 lower, 11.64 3/4. July beans down 9 3/4, 11.78. November beans closed at 11.69 1/4, down 9 cents on the day.
Yeah, within 20 cents is some critical support in that May bean contract, and it was proven again today. Beans can cover 20 cents worth of ground in a short period of time, so pay attention in this bean market going into the end of the week.
Well, July cotton today was 77 points lower at 87.07. On your livestocks, June fat cattle posted a high-range open and a low-range close, with beef prices more than $2.80 lower in morning trade. June fat cattle $2 lower, 172.85. The October contract down $1.65 to 174.07 1/2. And May feeders were $2.92 1/2 lower at 236.52 1/2. And on the snout side, May hogs were $2.22 1/2 lower, 96.55. June hogs down 302 1/2, 105.55. Chip.
All right, thank you very much, Davis. Let's bring in Todd Horwitz, BubbaTrading.com. How you doing, Bubba?
What's up, guys? There's no inflation. That's a good thing, right? We have no inflation. At least they keep telling us that there's no inflation. And where do they think they're going to cut rates at now that the 10-year's at 4.54? I think that we got a little communication problem between the Fed, the government, and the people, because the people are getting tortured, especially the farmers, because the inputs keep going up and the outputs keep going down. But actually, I think grains have stabilized pretty well here. I'm not at all concerned that there's a lot of room on the downside. Certainly, there's always some room, but I don't think there's a lot. I think the markets have a much better chance, and it looks like they're making a nice little base here. So I would not be afraid to be long, and I'm still short cattle.
Still short cattle. Okay. All right. You and I know that there's been inflation deniers through this whole thing.
Yep.
Okay.
You should see my email.
all of a sudden, the data is starting to back up the idea that there could be a second wave of inflation and that it might just be getting started right now. Bubba, if that data starts to come in on a monthly basis over the next three months or so, there's no interest rate cuts coming, is there?
No, there's only two at this point, based on the numbers they want to report. Now we know the jobs number was 50% was government jobs, but on what they're reporting, they can't cut rates except for two circumstances. One, if it's a political move, which it shouldn't be because the Federal Reserve is supposed to be private. And number two is if they think that there is a depression coming, in which they want to get ahead of that. But they're never going to get ahead of it. And they're always, the Fed is so dumb, they're always behind.
Yeah. If they start coming out with ideas of having to talk down the economy to justify lower rates, I keep waiting for it to happen. And that kind of a comment coming from the administration, I think it's just a matter of time, Bubba.
Well, again, they're not going to talk it down because obviously they're trying to get reelected. But at the end of the day, there's a lot of problems out there. This is no different than '08. It's no different than any big time in history where markets were very much overbought and need a big sell-off, and I think we're going to see it.
Okay. All right. Todd Horwitz, BubbaTrading.com. Good stuff, man. We'll talk to you later.
Thanks, brother. Have a great day.
All right. Okay, coming up next, we're going to talk markets. We're going to talk China. We're going to talk U.S. relations. We've got Andy Shissler, S&W Trading.
Our name says it all. AgriTalk. What more do you need to know?
Welcome back to AgriTalk. I'm Chip. Okay, Andy Shissler with S&W Trading is our guest analyst today. He joins us right now. Hey, Andy, how's it going, man?
Hey, going pretty good. Thanks for having me on. I appreciate it.
Glad you're here. Every now and then, my list of questions about China gets long enough that I got to get you on.
Yeah, there's been some weird stuff going on here lately with them,
Yeah.
Just
definitely.
hitting the news wires this week and last. So
Yep,
even
definitely.
today.
So we'll get to it. We'll get to that. First, though, I just want to hear your general attitude towards these markets. The fund positioning, the positioning for spring, We got the supply and demand reports coming tomorrow morning. What do you make of how the grain markets are trading right now?
That's I write a commentary every morning, and there's lots of stuff in it. And in the end, I'll get an email from somebody and say, "So what's it going to do?" I'm like, "Go up." I just up. But anyway, so you were curious about seasonals,
Yeah.
and kind of what can happen here. So I looked into it this morning, kind of stuff I just know in my head anyway. But so where prices are at on April 1st, through the last 20 years in corn and beans, we have gone higher than there. And so the price for December corn and November beans. So the December corn was $4.78, and the November beans were $11.90. And we're actually lower from there in November. But again, it's actually like 23 years that we've taken that high out. But the average rally post April 1st is 12% in corn and 12% in beans.
Wow.
And so like we usually go up. And so like if there's a time to be optimistic, I would say it's now. And that 12% equals about 1335, and then the corn is about 535.
Okay.
Now there's open chart gaps in the futures contracts that we usually fill, and there's an open chart gap at 504 in corn. And the January high is 502, and we probably take that out probably 95% of the time, the January high.
Right.
And soybeans don't really follow any of that, other than they usually rally right now. They don't necessarily take out January highs. It's like 50-50, because sometimes we're really pricey at the turn of the year when China finishes buying all their U.S. beans, and then we kind of deflate after that. So I think all that's possible. I guess it could happen that we always see a 5% rally, but I don't know.
Yeah. Novi beans have got an open gap up there too, right? 1305, 1306.
Right. And then this percentage puts them above there.
Yep.
So I think that if you're looking for a place or a price and you're always guessing, that's as good a guess as you can do. Yeah. It's like if you had to do marketing and do a lot of it at once, it'd be a good place. And then also later on in the season towards August, we're almost a lot of the time we're below the April 1st price going into fall and into the end of August. So you get that window, and we know this seasonal happens. Most people would tell you this, the same thing, but These are the numbers that are here today. And I think all of this is doable. We've seen other markets perform, whether it be gold, cocoa, briefly cotton, cattle. We've had things make their run, and the funds are pretty much record short in April for this month ever. I think the last time was maybe 2019 that they were the short, and that time, and most every time they've come out of all these shorts at least once, and I think that does develop. So I don't know when it happens, but I think it goes up, and I think we hit these numbers. Okay. And beans can blow through that. Like they have a history. We've seen $3 rallies, $6 rallies, 20%, 30 and 40% rallies. We've seen it. It just kind of depends on what happens here. But I think that's what you look for. I think that's probably the most important thing I say here today. One of them.
Okay. And you got the seasonals, but like you said, we've got the funds in here on the short side of the market. Are the seasonals and the risk of a rally enough to get them out of the shorts, or does it need some sort of a trigger, some sort of a catalyst to force the fund's hands here a bit?
I don't think it'll be. It really kind of depends on this interest rate thing a little bit, and kind of how the dollar is going to react. But before I say that, I would say that I think it's highly likely that it happens. And you already saw the short in bean oil that was pretty hefty. They already came out of all that. And so we've seen one of the ag commodities where they came out of all the short and were mildly long. I'm going to say 6,000 or 8,000 contracts last Friday. And I think that's something that they build on over time. And the bean oil market might be the driver of soybeans to bring it up here, as the disappearance rate should be really high, even though we're going to produce more of it, which should suck down the bean stocks at the same time, because we have record crush every month here.
Yeah.
So I think that is the first signal that, we've seen it happen with one already, and we can see it with some more. Wheat, however, I don't know. there's all kinds of bullish stuff on wheat around the world, and man, it's just stayed short. It has.
Yeah, just stayed short. But today, when we get a little bit of a comment or consensus in the forecast that maybe things are going to dry out and warm up in the southern U.S. plains, and we get a pop in HRW, and it's going to take a whole lot more than that to scare that wheat crop out there. I know that, but it was still good for some gains there today. I want to go back to something that you said. You mentioned the rally in cocoa. Yeah, cotton had the spotlight for a little bit. There are other rallies in the commodity world. WTI over $85.
Yeah.
Have the ag commodities been left behind?
I think one of my old friend traders told me, he goes, just stay alive in this thing. He's been trading since the 70s. And he was involved in cocoa the last time it did something like this. He's just stay alive. Something's wrong here. These prices are wrong, and it'll figure itself out. Because it's like when you look at stocks and you look at crude oil and a lot of these other things, record gold prices, we're entirely too low. And I think the cost on doing a lot of this stuff didn't go down either. So at some point we need to get paid to do it. Look at cattle prices, and we've traded huge ranges, but they're all-time highs. And like we had feeder prices that were the highest they've ever been here just recently, unlike some of these November contracts and stuff like that, after we saw $50 break, right before it. So I think it can happen. I think that it's interesting because Yellen was talking with China.
Okay.
And a lot of these big policy things will kind of change what's happening here. And I thought it was curious how gold all of a sudden in an environment where they want inflation down, that the gold just came out of there and went to record highs. And it just seems so weird that like they try to keep crude down, but they can't do it because the control is worldwide and we just can't do nothing about it. But with gold, we have a pretty good hand in that. But I think they want to devalue the US dollar versus the Chinese yuan. And I think they let the gold float. And I think that's part of what this meeting was about. So it's not something that's going to happen today, but I think they want to unwind some of this debt position, and they want to devalue the dollar. And they want the price of goods in China to go up. And they also want them to have a stronger dollar so they can afford to buy their stuff, so that both won't be real happy with this, but they can kind of get a win out of it without taking the whole thing down. Mm-hmm. So I thought that was really important last week, and I've read a lot of stuff about it since, but I think over time, I think that the dollar is probably going to head lower here. But again, the election's in the way, so who knows? Maybe that doesn't happen. I think it's what they want to happen, though.
Okay.
Where they didn't before.
Okay, it's been within the last 6 months or so that you were on the show here and talking about the China's accumulation of gold stocks, right?
Yep.
So, I mean, is it all connected somehow, some way?
I think it is. And so they had that meeting back last fall where they took on some U.S. debt, but they've been trying to create a backing for their currency so it has some value and it's worth something. And they've continuously hoarded gold, and that makes the value of their currency more, especially as gold jumps in price. And that's something we're okay with, right now. Mm-hmm. So I think it's just, they won't raise their currency on their own. I think we kind of forced their hand.
Okay. The question that I'm going to ask you when we come back after this break is, so what's it all mean? Is it going up or going down, right?
Yep.
So we need to talk about that a little bit more. We need to do a little bit more on the prep side for the supply and demand report. We get the updates to the South American crop estimates. We'll find out what Andy's thinking about that coming up next.
Let's go to the markets page at profarmer.com and check today's closes. Where July HRW wheat futures were 13 1/2 cents higher at 5.87 3/4. July SRW wheat up 1.5 pennies to 5.73 1/2. May corn futures 3 cents higher today, 4.34 1/4. December corn futures closed at 4.70 1/4, up 2 cents on the day. May soybean futures 9 3/4 cents lower, 11.64 3/4. Novi beans closed at 11.69 1/4, down 9 cents today. July cotton 77 points lower, 87.07. On your livestock, June fat cattle $2 lower, 172.85. October futures down $1.65, 174.07 1/2, and May feeder futures 292 1/2 lower at 236.52 1/2. And on the snout side, June hogs down $3, 2.5 cents, 105.55. Try profarmer.com. Opinions expressed on AgriTalk do not necessarily reflect the views of Farm Journal Broadcasting, affiliate stations, or sponsors. If the world is your oyster, we've got pearls of wisdom on AgriTalk.
We are in the middle of a conversation with today's guest analyst, Andy Shissler, S&W Trading. Welcome back to AgriTalk. I'm Chip. Andy, during the break, Davis Michelson proving that he is much, 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 much more than just a pretty face here on AgriTalk Radio.
So much more.
So much more.
Mm-hmm.
The gold accumulation by China, the effort to appreciate the value of gold, is it groundwork for a BRICS dollar? And Davis, correct me if I'm wrong on this, but I think you're probably thinking groundwork for a BRICS dollar for, a new default currency for global trade. Is that
At least partially backed by gold, yes.
Yeah. What do you think there, Andy?
Well, I think China wants to buy oil with their own dollars instead of use ours. And it's like to trust that you could yes, I don't think a lot of these countries want to do the same thing. I think there was a resistance to let gold float because they're in a war with Russia, and wheat prices have suffered, gold prices have suffered, natural gas has suffered. They can't make crude oil suffer, but they do the best they can. And it's like everything was to try to spurn Russia, and we've kind of come to a point where it's not going to change because all their money they bring in from oil. But China has been on this path since 2009, and so they want to use their currency and not use the U.S. dollar and not be connected. But you got to trust that the bank's there to cover it in China. You know what I mean?
Yeah.
It's like, can you get your money out? Then how do you do it? And then
is there enough liquidity?
Yeah, I mean, you've seen what they do like for their stock market. It has a bad couple of days, and they say you can't sell stocks anymore.
Right.
And like real estate, right? So there's a no sale rule on real estate to stop it from going down here recently. And it's just like, so it's like, yeah, that's great, but we're not ready for that.
The real question is, if you can't sell it, does it have any value?
Well, that's what becomes really questionable, and that's like their currency, for example. It isn't based by stocks because that thing doesn't really work. It never has. Right. But so I don't know. It's as far as like their grain buying, I think they like to buy as much corn out of the Ukraine as they can and none from here, and the availability is just not there. And like in their long-term plan was always to kind of buy as much grain out of there as possible. Yep. And buy a lot of Russian wheat and stuff like that too. And corn's fine, but Brazil can use a lot of their corn. And it's never really made sense to come to the US when you could buy stuff that's more expensive, that you can ship and has better trade route on it. So, but they've bought a lot of US beans this year, last year, and the year before. And I don't think that changes, even though you hear some tough talk out there. I mean, I think the demand doesn't change a whole lot as far as they go, but we're never going to see a lot of corn from them. And it's not surprising that they went to Brazil. But the lack of Ukraine corn and the fact they did go to Brazil put our corn exports 30% ahead of pace, which is pretty bullish. So like there's a lot of bullish things, I think, in corn's direction right now from a demand standpoint.
Right. Okay. Good. What is happening with the signals on the production side out of China? Just a couple of weeks ago, we heard all the talk about don't use the imported supplies, use domestic supplies, stuff that's already on the ground there in China, in an effort to support the domestic price, to support extra production. And then it was just a couple of days later, there were comments and talks from Chinese officials that we can do what we want to encourage production. We just don't have the area to make it happen. I don't know what's the truth. Does anybody?
They definitely don't have more area. That's for sure. And like they're pretty limited as far as the amount of feed that can be produced versus what needs to be used for food, on that land. And it's not more land that they have. It's less. And the production capability can increase, and it's been doing that at a slow pace. Although, if you look at data that comes out of China, they've never had a single weather problem ever, as their trend line just goes ever higher.
Right.
It's you know what I mean? It's like, we have weather problems here, but they don't have any. They're just higher every year. And then their corn acres is not that many. I mean, was it like 80 million or something like that?
Yeah.
I mean, total. I think something like that total. So.
Yeah.
But I think it's the South American things. Like our USDA doesn't lower Brazilian production soybeans or corn, and yet CONAB is like 8 million metric tons lower in soybeans and like 14 or 15 in corn.
Right. And
you can see that impact because the cash basis in Brazil is a lot higher than it was a year ago. And, we're seeing some other business from that too. So I don't know if that's going to finally come home to roost tomorrow. You know what I mean?
Yeah. You would think that there would be some narrowing of that gap at some point. I think USDA right now is just saying that CONAB's got their area wrong, that everybody has got their area wrong, and there's just way more acres planted to corn and to soybeans in Brazil than anybody but USDA and their satellites know. I think.
Do you think that's possible though? I mean, how could you be that wrong or that off? I don't
know.
I just can't think that when you harvest stuff and the data and the acres can't change that much year to year. And like Argentina, I think is another one that's kind of weird because I know some people that just went down there and like, and you see the ratings that they put out from Buenos Aires, and the ratings have been pretty poor. And it's like, it didn't seem like the weather was that bad. Like, how are the ratings that poor? And he says, well, they're just broke. And like the crops really aren't that good and there's no money. And he goes, it's just, it's not that good. And it doesn't look that great. And it's like the yields just can't be that good. And I don't know. I think that's kind of telling too. So I'm kind of more on the CONAB side as far as that Brazilian and Argentina crop. And I think it should matter, but I guess we'll see. I mean, it screwed up the cocoa and coffee market, from record heat in South America this year, as well as what's happened on the Ivory Coast. But I mean, I think it mattered, and I think it was a big area. So,
okay. Well, for the first time this week, I've heard the comments about, and I think it's probably been developing. How do I say this? I wasn't the first to hear it. Let's put it that way. The insect problems in Argentina, the disease problems in Argentina are real this year, is what it sounds like. So that would go in line with they're broke and they just don't have the money for crop protection, I guess. So
or fertilizer for that matter.
Fertilizer,
I mean, I'm sure that's a big component of it too. It's just like it is old machinery and it's destitute. I'm just like, wow.
Well, I mean,
not surprising.
No, that's right, Andy. Don't they just plan on next year's fertilizer costing twice as much as what it did this year? That's kind of the number that they pencil in Argentina, isn't it?
Yeah, and their exports for their country were down 50% last year. So how much money is there to go around on that? Not much.
Oh,
So they probably put 50% less fertilizer on if they could do it,
oh man. Yeah, it takes a couple of years to recover from that. No question. No question.
Oh, yeah.
Okay.
Yeah.
Okay. So I agree with you. There's going to be a convergence between USDA's numbers and CONAB's numbers, with USDA moving down to CONAB's numbers, or closer to CONAB's numbers. Okay. So if that happens, is that enough to give us some strength in corn and beans?
Well, it could, and it could start tomorrow. If you look at the stocks number that we just had, I thought the acres would come in closer to where they were on a normal crop rotation, and that's what looked like happened there. Makes sense. We were ahead in exports, ahead in feed, ahead in ethanol, and the stocks report came in friendly, and so the report tomorrow will be friendly corn, and the math says it will be, and I think it will. And so like that could be a starter, but like if there's a surprise out of Brazil, then maybe that gets the funds on the wrong side of it and changes something here. But we've seen this is the hottest world weather on record, and we've seen many people have weather issues. It wouldn't take much to kick this thing into gear just from purely weather. And it's been a really warm winter too.
Yep. That's right. And kicking the shorts, number one, happened with the 90 million acres on corn planting intentions, right?
Mm-hmm. Yeah.
So you give it a second boost with some bullish numbers tomorrow, maybe we could get some short covering going in corn. That'd be cool.
Right. No, I think it would be cool. I mean, you cross your fingers, but I think we'd had about 6 bearish crop reports in a row before this last one with the stocks and acres. I had to read it twice. I was like, is that what that really said? I'm like, oh, okay. Well, that's what I was hoping it would say, and it kind of did. So it's just but we had a lot of prevent plant. It's like our acres were skewed from the last year, and this is more like what it should be, where both crops can perform more the same, price wise, where one's better than the other. That's not really what you want as a producer.
Right. Gotcha. All right, Andy, good stuff, man. I hope you're right, and I hope we get some movement on those South American numbers tomorrow and give the funds a little incentive to get out. Bring some volatility back into the market, huh?
Yeah, exactly. Cross your fingers.
There you go.
Thank you.
Thanks, Andy. Talk to you later.
Yep.
Andy Shissler, S&W Trading. Okay, so what's it all mean? We do have the numbers coming tomorrow from USDA. Davis and I will wrap up our preview work on that next here on AgriTalk.
We don't make the news, we render it. AgriTalk. And welcome back to AgriTalk, everybody. Your pal Davis Michelson here with you. Chip, it's Wednesday.
It is.
Yeah, the 10th of April. Here we are. We're at the summit of Mount Hump Day. We are here. Let's start with... here. We'll make it easy. I'll go to my first note under Bubba from today's conversation. You ready? He feels like grains are stabilizing here. Doesn't have quite so much confidence in the cattles, but is feeling like a turnaround maybe in the works here.
Yeah,
and we kind of got... Go on.
Yeah, I was just going to say, quick note on the cattle. He's been on the sell side of the cattle for quite some time.
Yes.
And it I'm not saying that he's overdone it, from with that regard.
Mm-hmm.
But he's been on the sell side of cattle for quite some time, and it's the right side of the market for right now. I don't think there's any question. So, but stabilizing in the grains, wouldn't that be something?
Yeah, we would love that. And it almost sounded like Andy Shissler was faintly echoing that sentiment. Time to be optimistic is coming up real soon here.
Right. Can put together some positive thoughts on where this corn market might be heading. So it got me to pull up the Dees corn chart during the break.
Okay.
We've got a huge wedge formation happening on the daily chart, zeroing right in on the 470 level. And today we closed at 470 and a quarter. So we're right in the middle of where that wedge formation is. We're probably deep enough into the wedge already that it's kind of negated itself all at this point. But hey, low range open, high range close today, back on top of 470 after a 1 day close below it. It maybe we can get things going. Now the first thing that we need to do in D's corn, this would be target number one if we would get some price positive outlook in the supply and demand report. Target number one is 476.5 in D's corn. Get a close above that, it'll really improve my outlook. Then after that, the next level is 477 and 3/4, and then you get up to 481. So there are targets to the upside that are in range, easily in range of this corn market should the funds decide it is time to get out of the short side of the market.
All right. Well,
so,
and
I don't know.
Shissler was talking about an exit from the short side of bean oil, suggesting maybe there are even 6,000 contracts long at this point.
Yeah. It didn't take long, and that's that's the other thing that has concerned me for a while here, and it all goes back to probably, I'm sure it was 10 years ago when the funds were heavily short corn and soybeans, and all we wanted was for the funds to get out. If we could just get the funds to get off of the short side of the market, boy, look out, that'd be a heck of a rally. Well, they did it, and it was barely a blip on the charts. And it was because the commercials who were long, which they are now, also rolled out of those long positions into short positions. So it all happened at basically the same time, and everything offset itself.
Yep.
Well, if that kind of a thing happens, again, which is very possible, we could get the funds out of short positions and not see much action or price action in corn and soybean futures from that. I should say it's not a prediction. It's more of a warning. Mm-hmm. It's more of a warning because the other thing that could happen is, like Andy said, beans could put on $3 just from the funds getting out of short positions. Mm-hmm. That kind of stuff happens in these markets.
Yeah. Well, and one of those that kind of stuffs comes up tomorrow. How big a market mover typically is the April S&D report?
Yeah, not much.
I didn't think so.
Yeah, not much. And what we should be looking for, I think, is the start of convergence of this wide range of estimates for corn and soybean production out of South America and Brazil in particular. So the range, I think, is starting to narrow up. It is. Mm-hmm. It is. I mean, there's no question about it. Because when we look at the average trade guess, according to a survey by Reuters, the average trade guess on Brazilian corn production, 121.75 million metric tons. The range is 118 up to 124.2. So it's still 6 million tons wide, but it is starting to narrow up, and the convergence is happening. On soybean side of things, 151.68 million metric tons is the average trade guess. The range of estimates, 148 to 155 million metric tons. So 7 million metric tons on the guess range there on soybeans. Out of Argentina, the average trade guess on corn, 55.6 million metric tons, the range of 54 to 57.75, and on soybeans, 50.48 million metric tons with a range of 50 to 52 million metric tons. And you know what? The low end of those ranges might be too high. because of some of the late season issues that are coming into the corn crop in particular. On the ending stocks for U.S. corn, soybeans, and wheat, The average trade guess on corn, 2.102 billion bushels. In March, the estimate was 2.172, so down 70 million bushels there. Soybeans, 317 million bushels, up 2 million from 315 last month. And wheat, 690 million bushels. The average trade, the March estimate was 673. So up about, what are we looking at? 17 million bushels there. The 6 to 10 day outlook from the National Weather Service, April 16th through the 20th. Above normal temperatures expected, Iowa and eastern Kansas to the east. We've got near normal temperatures expected in the western and northwest production areas. Above normal precip over the entire Corn Belt. We're going to get report reaction from Ed Uset tomorrow afternoon here on AgriTalk.